All right, so today we are going deep on blue chip stocks.
Oh,
You know those companies that are,
like the royalty of the
yeah,
stock market.
exactly, the big names.
Hmm?
And we've got a whole bunch of sources here.
Cool.
Articles, podcast scripts, even some expert opinions to really get into what makes these companies tick.
That's awesome. That's awesome.
So when you hear blue chip, like, what comes to mind?
Well, I think a lot of people, they think stability first,
Right.
but it's really about being resilient.
Resilient. Okay, so more than just a household name.
Yeah.
What makes a company truly a blue chip?
I mean, imagine a company surviving, thriving even, through world wars,
Wow.
recessions, massive technological shifts.
Yeah.
Like, those are the traits of a true blue chip.
They've seen it all.
Yeah, they're like the financial equivalent of those tiny organisms that survive in like the harshest environments on Earth.
Oh, wow. That's a great comparison.
Yeah, they adapt and they keep going.
So that's way better than just saying they're solid or reliable. So are we talking about companies like, say, Coca-Cola?
Exactly. Coke's a classic example.
They've been around forever.
They've navigated changing consumer tastes, global crises,
all of it.
everything.
Mhm.
And yet, they're still just like a dominant force.
Still on top.
And that resilience is huge for
Yes.
investors.
Which makes sense.
That's what attracts them.
So it's not just buying a famous name, but a company that can kind of survive anything.
Exactly.
Now, this whole blue chip thing,
Mm-hmm.
doesn't it come from poker originally?
You're right. Just like in poker, where blue chips are the most valuable,
Yeah.
these companies represent the top tier of the stock market.
Oh.
So they're the ones with that long history,
Right.
strong earnings, consistent dividend payouts,
Mhm.
all the signs of a healthy business.
So you mentioned dividends.
Yes.
And one of the podcast scripts that we have, Money Matrix, talks about how blue chip companies tend to be reliable dividend payers.
Yes.
So that steady income stream, that's got to be attractive for investors, right?
Absolutely. It's like having a dependable stream of income
Oh, okay.
flowing from your investments.
Come in.
And here's the kicker. You know how some companies might cut dividends during like tough times?
Oh, for sure.
Blue chips are more likely to increase them.
Really?
Yeah.
Why would they do that during a downturn?
It's a signal of confidence.
Oh.
It shows that the company believes in its long-term prospects,
Even when things are bad.
even when things get rocky. Yeah.
Interesting.
And that stability is incredibly attractive to investors,
Especially long term.
especially those looking to build wealth
Over the long haul?
over the long haul.
That's fascinating.
Yeah.
So it's like they're saying, we're so solid,
Right.
we can afford to share even more with investors.
Right.
That's pretty impressive.
It is.
But how do these companies even get so big in the first place?
Well, that's where market capitalization comes in.
Market cap.
Yeah. It's a fancy way of saying the total value of all the company shares. Imagine a giant pizza. Each share is like a slice.
All right, I like that.
Market cap is the value of the entire pizza.
Okay, the whole pie.
And blue chips.
Yeah.
They have some of the biggest pizzas out there.
So we're talking billions,
Often, yes.
even trillions of dollars.
Yeah, the big Apple, Microsoft,
Yeah.
Amazon,
It's big ones.
massive market caps.
Okay.
And that size gives them a lot of advantages. Easier access to capital,
Sure.
influence in their industries,
Yeah.
the ability to weather economic storms
More effectively.
more effectively. It's all part of that resilience.
Makes sense.
Yeah.
But let's be real, no investment is totally risk-free.
Right.
Even these huge companies, there's got to be some downsides.
You're absolutely right. And Money Matrix actually does a good job
Okay.
breaking down some of those risks.
Okay.
One thing they highlight is that with blue chips, you're probably not going to see those explosive overnight gains.
Right. I guess those massive growth spurts
Mhm.
happen when a company is younger,
Younger at
has
it.
more room to expand.
Exactly. Blue chips are more about steady, reliable growth.
Okay. Got it.
Think marathon, not a sprint.
I like that. The tortoise.
The tortoise of the investment world.
Steady and slow.
Slow and steady, they get to the finish line.
They'll get there.
Exactly.
Okay. So no get-rich-quick schemes.
Right.
But what about market volatility?
Yeah.
Even big companies, they can be affected by downturns, right?
True. No stock is completely immune to market fluctuations.
Okay.
That's why diversification is so crucial.
Right.
You don't want to put all your eggs in one basket,
Even if it's a really nice basket.
even if it's a blue chip basket.
That makes sense. So even if I love, I don't know, Coca-Cola,
Right.
I shouldn't put all my money in just Coke stock.
Exactly. It's about spreading your investments across different sectors and asset classes.
Oh.
And even within blue chips, you want to have a mix. Don't just focus on one industry.
Smart.
Think about how different sectors might react to different economic conditions.
Oh, that's a good point. So if one part of the market takes a hit,
Right.
my whole portfolio won't go down with it.
Exactly.
That's smart, but here's something else I've heard.
Yeah.
Some of these blue chip stocks, they can be really expensive to buy.
Mm-hmm.
Like hundreds, even thousands of dollars a share.
That's a valid concern, especially for newer investors.
Yeah.
Some blue chips do have high share prices.
Okay.
But remember, there are options like fractional shares.
Fractional shares. Now that's interesting.
Yeah.
Tell me more about that.
So you can buy a portion of a share.
Oh, okay.
If the full price is too steep,
So you can get in.
it's like getting a slice of that giant pizza instead of the whole thing.
I love these food analogies.
Hey, they work.
That's a game changer. It's like you can get a taste of the blue chip experience
Exactly.
without having to put up a fortune up front.
Right.
What about ETFs?
Yeah.
I hear that a lot.
ETFs, or exchange-traded funds, are a great way to get exposure to a basket of blue chips
Okay.
with a single investment.
So rather than picking, I could just buy an ETF that covers a bunch of them.
Exactly. They track specific indexes like the S&P 500, which
Yeah.
is full of those heavy hitter companies.
Okay.
So you're instantly diversified across a whole bunch of blue chips.
Interesting. That sounds less intimidating
Yeah, it can
than
be.
picking each stock.
Exactly.
But how do I go about choosing the right
Right.
blue chip stocks or ETFs?
That's where the real art of investing comes in.
Okay. All right. Detective hats on. Where
Yeah.
do we even begin?
Well, one of the first things I always look at is a company's financial health.
Like their earnings reports, debt levels, that kind of thing.
Exactly. You want to see consistent profitability,
Okay.
manageable debt, and ideally, a history of increasing dividends.
So those are good signs.
Good indicators that the company's managing its money well.
It's not just about the numbers, though, right?
Right.
Don't we also need to know what the company actually does?
Absolutely. You want to understand their business model,
Okay.
their competitive landscape, their long-term prospects.
Right.
Are they innovating? Are they adapting to those changing consumer trends?
Right. Because a blue chip today
Exactly.
might not be a blue chip tomorrow.
Right. Think about those old school phone companies
Yeah.
that didn't embrace the smartphone revolution.
Oh.
They were once considered rock solid and then gone. So you need to assess if a company's positioned to stay relevant and profitable.
In the future.
In the future, look for signs of growth,
Okay.
expansion into new markets, smart acquisitions, things like that.
This is starting to sound like a lot of work.
Well,
Is there a shortcut for lazy investors? Just kidding. Sort of.
Well, there are resources,
Okay.
financial websites, analyst reports,
Mhm.
even some podcasts can provide valuable insights.
Oh, for sure.
But remember, always do your own due diligence.
Yeah, you can't just
Don't blindly follow
Yeah.
someone else's recommendations.
Always good advice.
Yeah.
So we're looking for companies that are financially sound, solid business model,
Yes.
positioned for future growth. You know, it's interesting.
What's that?
The Motley Fool article we have here,
Yeah.
it pointed out that a lot of younger investors are jumping on the blue chip bandwagon.
That's a really interesting trend.
Millennials and Gen Z, who you think would be all about the
Yeah.
tech disruption.
Jumping new stuff.
Yeah, they're seeing the value of these established giants.
It makes you wonder if maybe they've learned a thing or two from the ups and downs
Oh, yeah.
of the market in recent years.
That makes sense.
Yeah, maybe they're realizing that slow and steady can actually win the race,
Especially for building that long-term wealth.
especially when it comes to building long-term wealth.
And with fractional shares
Right.
and ETFs, it's easier than ever to get a piece of that.
Yeah.
It's like they're saying, hey, we can have our crypto. We
Right.
can have our meme stocks, but we want a solid foundation.
For sure.
You know, as much as we've been praising blue chips,
Right.
you know, this whole deep dive
Yeah.
is really just for informational purposes.
Right. We can't give financial advice.
Yeah, we're not qualified.
What we're trying to do is equip our listener with the knowledge
Yes.
to make their own informed decisions.
Exactly.
Yeah,
Investing is a personal journey,
it is.
and what works for one person might not work for another.
Absolutely.
Always do your own research.
Yes.
Consider your own financial goals, risk tolerance.
Mm.
And if you're ever unsure about anything,
Yeah,
don't hesitate to reach out to a financial advisor.
absolutely.
They can give you that.
Yeah, personalized guidance
Yeah, exactly.
based on your situation.
But before we move on to the specific investment strategies,
Correct.
I'm kind of curious,
Yeah.
knowing what we know now about blue chips,
Mm-hmm.
do you think it's possible to spot the next big one
Oh, that's a good question.
before it becomes a household name?
Like, are there telltale signs
Yeah.
of a future blue chip?
Is there a way to predict the next Apple or Amazon?
It would almost be like having a superpower.
Right. But Is there a way to do that? What would we even look for?
Well, it's definitely not easy.
Okay.
But if we were to play future blue chip detective,
Okay, I like this.
there are a few clues we might look for.
All right, Leo Mommy.
One would be innovative products or services that are disrupting an industry.
Okay, so think about how Tesla revolutionized the electric car market.
Potentially, yeah.
Could that have been a sign?
Yeah.
They were on their way.
Hmm.
Okay.
Another clue would be a strong management team with a proven track record of success.
So not just figureheads.
Right.
People who are really driving the company forward.
Exactly. And don't forget about financial performance.
Of course. Numbers.
Yeah, we'd want to see strong and consistent revenue growth, healthy profit margins, solid balance sheet.
So even if it seems innovative and has a great team,
Right.
the numbers still got to add up.
It's like a three-legged stool.
Okay.
You need all three legs to be strong
To stand up.
for it to stand up, yeah.
I like that.
And, one more thing I'd add to our future blue chip checklist
Okay.
is a company's ability to adapt and evolve.
Because the world is always changing.
The world is changing faster than ever.
So they have to be able to keep up.
So you want to see companies that are agile
Right.
and can adjust to new technologies, consumer trends, economic conditions.
Well, it's not enough to just disrupt. You got to keep disrupting.
Exactly. Think about Amazon. They started as an online bookstore,
Right.
but they've constantly evolved
Expanded.
and expanded into new markets,
Wow.
from cloud computing to grocery delivery.
You do it all.
That ability to adapt is a hallmark of a true blue chip.
This is making me want to go back and research all those companies. I thought were just trendy startups to see
Yeah.
if they have blue chip potential.
That's the spirit. And remember,
Yeah.
even if you don't end up picking the next Amazon,
Right.
investing in blue chips can be a smart and rewarding strategy for building long-term wealth.
Absolutely. It's all about finding that balance between stability and growth potential.
For sure.
But this deep dive, it's really got me curious
Yeah.
to hear more about those specific strategies for investing in blue chips.
Well, you're in luck.
Oh,
That's exactly what we'll be covering in part 3.
perfect.
Yeah.
Welcome back to the deep dive. We're talking all about blue chip stocks.
That's right.
Now, before the break, we were talking about how to actually choose the right blue chip stocks and ETFs.
Right. So where do we begin?
Yeah, tell me.
Well, one approach, very popular for decades, it's value investing.
Value investing.
It's a classic strategy championed by legends like Warren Buffett.
Oh, wow. Okay.
And it's all about finding hidden gems, blue chip companies that are undervalued by the market.
Undervalued, so it's not just about buying any blue chip.
Yeah.
You got to find the ones with the most potential.
You got it.
Okay, but how do we know if a stock is undervalued?
That's where the detective work comes in.
All right, so put on your detective hat.
Yeah, you need to look beyond the headlines.
Okay.
Really dig into the company's financials, their
Yeah.
management team, their competitive landscape, their future prospects.
So we're really getting into the nitty-gritty.
Yeah, it's like sifting for gold.
Ooh, I like that.
You have to move a lot of dirt to find those nuggets of value.
Okay, so we're not just looking at the current stock price.
Right.
We're trying to figure out what the company is really worth.
Exactly. You're looking for companies that are solid, but maybe the market hasn't fully recognized their potential yet.
I see.
Maybe they've had a temporary setback, or they're in an industry that's out of favor.
Oh, okay.
But if you believe in their long-term prospects, that apparent discount could be an opportunity.
So you gotta have a little bit of foresight.
Yeah, you got to have some vision.
Vision, okay.
See where things are going.
But that sounds like it requires a lot of research
It does.
and expertise.
Mm-hmm.
What about a strategy for people who maybe don't have, a finance degree?
Well, another approach is dividend growth investing.
Dividend growth, okay.
We talked about how reliable blue chip dividends can be,
Right.
but this strategy takes it a step further.
Okay.
It's not just about getting those payouts.
Yeah.
It's about finding companies
Yeah.
that consistently increase their dividends over time.
So instead of just looking at how much they're paying now,
Right.
we're trying to find the companies that will probably keep raising those payouts
Exactly.
year after year.
You got it.
Okay. I like the sound of that.
Yeah.
But why is that so important?
Well, for one thing, it's a strong indicator of a company's health and growth.
Okay.
If they're consistently increasing dividends, it means they're confident in their ability to generate profits.
They must be doing something right.
Yeah. And for investors,
Yeah.
it means that stream of income keeps getting bigger and bigger
Over time.
over time.
Okay, so it's like planting a tree that not only bears fruit,
Right.
but the fruit keeps getting bigger every year.
That's a great way to put it.
That's a pretty sweet deal.
It is.
I'm liking this dividend growth investing.
Yeah.
But what about something even more hands-off?
Oh,
Like
wow.
set it and forget it.
Okay, well, for that, we have index investing.
Index investing. Okay.
This is a more passive approach,
Hmm.
but it can be incredibly effective,
Right.
especially for those who don't have the time or expertise to actively manage their portfolios.
That sounds more my speed.
Yeah, it's all about riding the wave of the overall market
Okay.
rather than trying to pick individual winners and losers.
So how does that work with blue chips?
Well, remember how we talked about mini blue chips being part of major market indexes like the S&P 500?
Yeah. Yeah.
By investing in an index fund or ETF
Okay.
that tracks those indexes, you're essentially getting exposure to a diversified basket of blue chips
I see.
all at once.
So instead of picking one blue chip, I'm getting a bunch of them
Exactly.
through the index fund.
You got it.
That seems like a smart way to, minimize that risk.
Yeah. It's a low-cost, relatively simple way to invest in the long-term growth of the market.
Long term. Okay.
You're not trying to beat the market.
Mm,
You're aiming to match its performance.
okay.
And historically, the market tends to go up over time.
Over time.
Yeah.
This has been really insightful.
Oh, good. I'm glad.
We've covered so much ground
We have.
from like what blue chips are, why they're attractive,
Mm-hmm.
even how to spot those potential future ones.
Right.
And now we're talking about these specific strategies.
Yeah.
So as we start to wrap up here,
Okay.
what's the most important takeaway?
The biggest takeaway is that investing in blue chips can be a smart and rewarding strategy
Okay.
for building long-term wealth.
Yeah.
It's about finding that sweet spot
Mm-hmm.
between stability and growth potential.
Balance. We like balance.
We do, but remember, no investment is foolproof,
Right.
and diversification is key.
Right. Don't put all your eggs in one basket.
Don't put all your eggs in one
Exactly.
basket, even if it's a blue chip basket.
Exactly. I like that.
Yeah,
So this deep dive has really emphasized that investing is a journey.
it is.
It's not just about picking a stock.
Yeah.
It's about learning,
Mm-hmm.
evolving,
Finding what works for you.
finding what works for you. Exactly.
Yeah,
So are you ready to get into some more specific strategies in part 3?
I am. Let's do it.
All right. Welcome back to the deep dive.
We're back.
We're talking blue chip stocks, and now I want to get tactical.
Okay, yeah.
We've talked about what they are, why they're attractive, how to even maybe spot some future ones,
Right.
but how do we actually make them part of our investment portfolio?
Well, let's dive into some specific strategies.
Right, hit me.
One approach that's been popular for decades is value investing.
Okay, value investing.
It's a classic strategy championed by legends like Warren Buffett.
Buffet. Okay.
It's all about finding those hidden gem blue chip companies that are undervalued by the market.
So not just any blue chip. We got to find the ones with the most potential.
Exactly. The ones that the market hasn't quite caught up to yet.
Okay, but how do we know if a stock is undervalued?
That's where the real detective work comes in.
More detective work. All right.
You have to look beyond the headlines and dig into those financials, their management team, their competitive landscape, and their future prospects.
Really got to do your research.
You got to do your research. It's like sifting for gold. You have to move a lot of dirt to find those nuggets of value.
So we're not just looking at the stock price right now.
No.
We're trying to assess the company's true worth.
You're looking for companies that is solid, but maybe the market hasn't fully recognized their potential yet.
Oh, I see.
Maybe they've had a temporary setback. Maybe they're in an industry that's out of favor. But if you believe in the company's long-term prospects,
Right.
that apparent discount could be an opportunity.
So you got to be able to see into the future a little bit.
Have a little bit of foresight,
A little bit of
a
vision.
little bit of vision.
Okay, that sounds like a lot of work, though.
It does take some effort.
What about a strategy for those of us who,
Don't have a finance degree, maybe something a little simpler.
well, another popular approach is dividend growth investing.
Dividend growth. We were talking about dividends before.
We were, and how reliable those blue chip dividends can be.
Right.
But this strategy takes it a step further. It's not just about getting those payouts. It's about finding the companies that consistently increase their dividends over time.
So instead of just a high dividend now,
Right.
you want a company that will probably keep raising those payouts
Exactly.
every year.
Okay.
You got it.
I like the sound of that, but why is that so important?
Well, for one thing, it's a strong indicator of a company's health and growth.
Oh, okay.
If they're consistently increasing those dividends, it means they're confident in their ability to generate profits.
They must be doing something right.
And for investors, it means that stream of income keeps getting bigger and bigger over time.
So it's like planting a tree that not only bears fruit, but the fruit keeps getting bigger every year.
Exactly. You're getting more and more dividends.
Yeah. That's a pretty sweet deal.
It is a sweet deal.
I'm really liking this dividend growth investing, but
Yeah.
what about something even more hands-off?
Even more hands-off.
Like set it and forget it. Is there such a thing?
Well, for that, we have index investing.
Index investing. Okay.
This is a more passive approach,
Okay.
but it can be incredibly effective, especially for those who don't have the time or expertise to actively manage their portfolios.
I think this might be the one for me.
It might be, yeah.
So tell me more about this.
Well, it's all about riding the wave of the overall market
Okay.
rather than trying to pick individual winners and losers.
Less pressure.
Much less pressure.
Yeah. So how does that work with blue chips?
Well, remember how we talked about many blue chips being part of those major market indexes, like
Right.
the S&P 500?
Yes.
By investing in an index fund, or ETF, that tracks that index, you're getting exposure to a diversified basket of blue chips all at once.
Oh, okay.
Yeah. So you're not putting all your eggs in one basket.
I'm spreading them out.
You're spreading them out across a whole bunch of blue chips through the index fund.
That seems like a really smart way to minimize the risk.
It is. It's a low-cost, relatively simple way to invest in the long-term growth of the market.
So you're not trying to beat the market, you're just trying to ride with it.
Exactly. You're trying to match its performance, and historically, the market tends to go up over time.
Over time. Okay, that makes sense.
Yeah.
Well, this has been a really incredible deep dive.
I'm glad you enjoyed it.
We've covered so much ground. We have from understanding like the core principles of blue chip investing to actually exploring some really actionable strategies.
Yeah. We got into the nitty-gritty.
Yeah, we did. So as we wrap up here,
Okay.
what's that one big takeaway you want our listeners to remember?
I think the biggest takeaway is that investing in blue chips can be a really smart strategy for building long-term wealth.
Long term. Okay.
Yeah, it's about finding that sweet spot between stability and growth. Potential.
Balance.
Balance, exactly. But no investment is foolproof. And diversification is key.
Don't put all your eggs in one basket.
Don't put all your eggs in one basket, even if it's a blue chip basket.
I love that. Such good advice.
Yeah,
This deep dive has really shown that investing is a journey.
it is.
It's not just about picking a stock. It's about learning,
Mm-hmm.
evolving,
Finding what works for you.
and finding what works for you.
Exactly.
Well, I think that about wraps it up for this deep dive
Yeah, I think so.
into the world of blue chips.
It was a good one.
It was a good one.
Yeah.
I hope everyone listening feels empowered to take that next step on their investing journey.
I hope so too.
So until next time,
Happy investing.
happy investing.